Hi everyone, this is an overview of homework problem number 4 from chapter 14. So this is a fairly simple problem, but it requires you to understand and use some of the tools that we learned from Principles 1. If you don't pull those tools out of your toolkit, this can be very confusing and you might not know where to start. So let's take a look at the facts that are given to us in the problem. We are told December 31, and I'll read the problem here. We're told December 31, Bonita Inc., you might have a different name of a corporation on your end, reports net income of $135,000 and cash dividends of $82,500. Determine the balance in retained earnings at December 31, assuming the balance in retained earnings on January 1 of the year was $217,500. Okay, so I've laid out the facts on the board here, and I want to keep emphasizing, write out each fact. You should have a piece of paper next to you where you are writing out each fact in kind of sequential order based on what is given to you in the problem. This is kind of very basic analytical process of just really be clear about what is being provided to you as upfront information. Because what we're going to do is we're going to take this information and make sense of it and get to our answer. Okay, so this problem is asking us to find out something about this account called retained earnings. Now, retained earnings is a new account that we are learning about in Principles 2. You didn't have this in Principles 1, so this is new. And it's new as of Chapter 13 because it's a corporate-specific account. So the first thing we want to do here is create a T account. Okay, you can see I've done that here on the board. The T account is an excellent tool to help us visualize the movement of money in and out of accounts. Okay, and it helps us go back to our debit-credit logic, which is essential. I want to encourage you guys to do this. This is why you should have paper and a pen out in front of you. Okay, if you remember, T accounts go in chronological order. So we're going to start with the earliest information is our January 1 balance for the year, and that is $217,500. This is January 1. Okay? Now, why did I put it on the credit side? Let's think through that. How do we add to equity? We credit equity, right? If you need to, do this. Lay out your accounting formula and just remind yourself, how do we add to equity? Well, we credit equity, right? Remember, we credit revenue and we debit expense. We credit capital and we debit drawings. If you're shaky on that, then this might be more difficult than if you're not shaky. If you're not shaky on that debit credit logic, this will be a lot easier to solve. So I want to encourage you. It's in your book. Go back to the chapter 2 if you need to. And if you want, reach out to me. I'm happy to share it. There's a graphic that lays out the accounting formula and the debit credit logic. You need to have that down solid. So our starting balance is a credit balance. And now we're told two events happen. First, we earn income, and then second, there's a cash dividend. So income, we're going to add, right? Because income gets added to equity. So this is net income. Now a cash dividend comes along. Corporation decides to distribute a cash dividend. That means we have money being removed from our retained earnings. Okay? Now, this dividend concept is new to Chapter 14. And a key part of Chapter 14 is to understand that dividends are paid from retained earnings. So that's why we're debiting retained earnings here. The T account, we add on the credit side, so $217,500 plus $135 plus $82,500, and I'm shorthanding my numbers here. And we get a balance at the end of $270,000. If you know your T accounts, if you're comfortable with your T accounts, if you're comfortable with your debit credit logic, this should be straightforward. If you're not comfortable, this problem will kind of flush that fact out, and it will force you, and what you should not do if you're not comfortable with this problem, don't worry, don't panic, just come at me, just let me know if it would be helpful to have more resources to kind of re-solidify this debit credit logic and the accounting formula, okay? I want you to all be comfortable doing this, and I hope this is helpful. Thank you.